A YouTube search on the word recession will get you a wide range of results. Some people swear we're in a recession right now, while others see it coming later in 2023. In today's video, I'm going to be covering the latest economic data for the fourth quarter of 2022 and see if we are anywhere near falling into a recession right now. And I'll provide a preliminary projection for fourth quarter GDP growth before the government releases their estimates later this month. Let's get into it. Welcome to Papaya Cast, the channel providing forward-looking economic analysis for those who want to stay on top of the latest economic developments. If you're new to this channel, my name is Eric, and I am a professional private sector economist in addition to being a licensed real estate agent in the state of California. If you want to stay up to date with the trends in the housing market, check out my other channel, Real Estate Watch, which I'll provide a link to in the description down below. My previous forecast for the third quarter GDP came in pretty close to the mark. I called for a 2.3% annualized increase, and the government estimate came in at 2.6% in their original estimate, and it has been since revised up to 3.2%. For the fourth quarter, it's shaping up to come in a bit weaker so far. I'm going to give you my forecast and outlook up front, but if you want to see how the underlying data is trending, make sure to stick around to the end of the video. Right now, fourth quarter GDP growth is tracking to come in at around 2.5%, and while this represents a slowdown from third quarter growth, it does represent the second consecutive quarter of positive GDP growth. There isn't a single time in recent history where we've had a recession while GDP was growing, so we're a ways off from one being called anytime soon. The traditional definition of a recession is 2 consecutive quarters of negative GDP growth. That happened in the first half of 2022, but most people didn't consider that a legitimate recession because the labor market was still adding jobs. So far, a recession is nowhere on the radar, but that doesn't mean that one might not be coming in 2023. The Federal Reserve has aggressively increased interest rates in 2022, and we still have not seen the full effect of their changes in monetary policy on the overall economy. Higher borrowing costs make zombie companies especially vulnerable. These are companies that are barely getting by as they continue borrowing to maintain operations. That being said, with a positive fourth quarter GDP and a labor market that is still adding jobs, a recession is currently not coming in the next few months. I'm going to dig into the underlying data, but if you'll be leaving now, please give this video a thumbs up to support the channel, and I hope you will consider subscribing and hit that notification bell down below so you know right away when my next recession update and GDP forecast video comes out. Now, let's get into the data. Consumer spending data for October and November came in very strong. What I like to look at for the monthly consumer spending numbers is the annualized 3-month percentage change. This is because it gives us the best look at how the quarterly growth rate is shaping up as the monthly numbers come in. That 3-month annualized growth for October and November consumer spending was 4%, which was the highest since the second quarter of 2021. Compare this with the 2.3% quarterly growth rate for the third quarter, and you can see how strong it was. Right now, consumer spending in the fourth quarter is on track to improve on the third quarter numbers. At this point, we're a little light on domestic investment data for the fourth quarter, but the indicators that are in so far are showing a return to slight positive growth after falling by 9.6% in the third quarter. Looking at the 3-month annualized change, industrial production of business equipment is up 4.9% in October and November, coming in a little lower than the 5.3% annualized rate in the third quarter. Information industry employment was 3.6% higher for October and November on an annualized basis, which was down from the 6.8% rate in the third quarter, suggesting that intellectual property investment might be a bit softer in the third quarter. Construction employment for residential and non-residential structures both picked up a bit in October and November. However, construction spending for both residential and non-residential structures were both down in October from the prior month. And housing starts were also down from September to October and October to November. So far, we're on track to see some weakness in construction investment for the fourth quarter. The big swing item in this category is usually business inventories, which have continued to detract from GDP growth as retailers have tried to get rid of the excess goods they ordered in 2021. Absent a big swing to the downside in inventories, we are on track to see an overall improvement in domestic investment in the fourth quarter. International trade was a big contributor to GDP growth in the third quarter. It was a perfect recipe of rising exports and falling imports. So far, it's looking a bit different for the fourth quarter. The 3-month annualized change for exports came in at 6.3% after adjusting for trade prices, which was down from the 15.3% we saw in the third quarter. Imports, on the other hand, surged in October compared to the 3 months prior, reversing the 7.3% decline we saw in the third quarter. It's just 1 month out of the quarter, but trade is shaping up to be a negative contribution to GDP for the fourth quarter so far. Total government employment in both the federal and state and local sectors are trending higher, averaging about a 1.8% annualized increase for October and November. Federal outlays for October and November are so far trending lower than they were in the third quarter. Overall, government spending is looking like a more or less flat contribution to GDP growth so far. So that's where we are right now. I'm currently looking at a 2.5% annualized growth for the fourth quarter. For those recession watchers out there, the big takeaway is that we're headed for another positive quarter of GDP growth as well as job growth. And you can't be in a recession if both GDP and the labor market are still growing. If you're not already, please subscribe to the channel, hit that notification bell down below, and give the video a thumbs up to support the channel and help it grow. Thanks for stopping by, and I'll see you in the next video.